This is Hub City Insider with Wayne Risher. FedEx founder Fred Smith got a nice raise in the year ending May 31st, according to a proxy statement for the annual shareholder meeting September 26. Smith's total compensation rose about $3 million to $16.7 million, mainly due to higher long-term incentive pay pegged to company performance over a 3-year period. Total compensation includes base salary, option awards, incentive pay, and various perks. It came at a time when FedEx was finishing a multi-year goal of boosting profits by $1.6 billion a year and making key acquisitions including European package delivery company TNT Express and reverse logistics specialist Genco. Smith's previous top pay package was $17 million in the 2007 fiscal year before the recession hit. Chief Information Officer Rob Carter's compensation rose 44% last year to $5.7 million. Pay packages declined slightly for Chief Financial Officer Alan Graff, FedEx Express President Dave Bronzik, and T. Michael Glenn, Executive Vice President, Market Development and Corporate Communications. In other news, Taylor Howerton, a SunTrust Bank expert on ports and logistics, told the Memphis World Trade Club on Tuesday that he sees solid growth prospects in third-party logistics.
Several reasons. One, it's the complexity in the supply chains today. The longer global nature of supply chains is an obvious one. But the volatilities that we see in currency movements, the volatility that we see in manufacturing moving from one area of production to another. Examples would be low-cost manufacturing moving from northern China and into Southeast Asia. The regulatory demands that, especially on the trucking side, and the acute driver shortages that are there and will likely continue to get worse, all is an incentive that if you have your in-house transportation logistics being managed when your main job is to either make socks or shoes or baseball bats, maybe transportation logistics is not your core competency, and it may not be a huge value add to the company overall, but it's a very high noise factor if something goes wrong. So if you can outsource that to someone who can, where it is their core competency, they do it every day, they do it across a geographic scale, they do it with multiple customers, where they can leverage technology investments over a broader suite of clients, then third-party logistics outsourcing makes a lot of sense. And I think it is a trend that will continue to add growth for those companies.
Howerton, based in Atlanta, said he thinks Memphis will continue to be a logistics powerhouse, despite shifts in the global manufacturing arena, ocean shipping patterns, and the competitive positions of U.S. seaports.
Well, I think Memphis is in a good spot already in terms of its central location and proximity to a good portion of large populations of the U.S. Having the 5 Class 1 rails here is a massive advantage. Some West Coast business moving to specifically the East Coast, especially if that cargo is going to be moving into the Northeast, may not pass through Memphis if it had been coming through the West Coast. But there are other areas where they'll be able to pick up freight, and that could be ports like Mobile, where you have Canadian National Railway connected into Memphis. And so over time, as Mobile is able to leverage the economies of scale of larger ships passing through the Panama Canal, that should be a benefit to Memphis. So in terms of overall cargo flows, I think Memphis continues to grow really with the general growth in freight demand. And it's in a location, luckily, where I think the any freight moving away from Memphis will be picked up in other areas of the supply chain.
Howerton also discussed how a massive buildup of inventories in U.S. warehouses and the demands of e-commerce might affect shipping peaks for giants like FedEx and UPS.
Until we start to see drawdown on inventories and then a replenishment back up, we may not see sort of the classic peak seasons that we're used to. And there is even some speculation that with the way e-commerce channels and omni-channel distributions are evolving, that the classic peak season may not look like what we've would expect to see going forward. But certainly there's still cyclical parts of the economy that whether it's back to school season or whether it's the holiday season, that if we were to get business inventories to contract some, we would then start to see those classic types of cycles build again. But this year, I don't know that it's a classic repeat of last year. There is a little bit of optimism that we might start to see some reduction in inventories, which there's early indications of that, and then perhaps a little bit more of a peak season than what we've seen last year.